Hi, Richard here on Thursday the 21st of October, and this is a chart of the US dollar on a weekly basis, and it shows clearly the support that we've on this rising trend line, which has been occurring since early 2008, where it came down, put up this reversal doji star candle. Yesterday we had a massive up day, and of course the indices, gold and silver and the Aussie dollar all came off heavily, and overnight they have just reversed back up, while it looks like we're going to get a retest of this support line on the US dollar. So in the event that it breaks through heavily, well, clearly we're going to see new highs on the world indices as well as gold and silver and the Aussie dollar. But this spike low was exactly where parity was on the Australian dollar. So moving to the US market, this is a daily chart of the US, and we can see here that these tops have been spike highs. They've been absolutely equal. There's been uncertainty as it rests against this long-term trend line, and we've had no convincing breakthrough. But I have to say that volume has increased here, which is likely that it means that there is a transfer of the commercials to the retailers, the speculators, and what we're likely to see is some weakness coming in here. So I think that's worth waiting for, and we certainly wouldn't be going long at this position. I wanted to also show you a chart of the volatility index, which is based on the Chicago Board of Exchange, the CBOE, the VIX as it's called. This is the GFC, record highs up around 90, and then we can see that throughout the period of the recovery rally up until we got this is in April, until we turned in April 26th, all of a sudden the volatility spiked back up and we saw lower prices. So as the VIX moves down, the indices are moving up. As the VIX moves up, the indices are moving down. So clearly here we've had the next recovery rally, which is on that preceding chart. You can see that's knocking against its resistance. But it's an interesting chart. It's worth keeping an eye on, because the moment that spikes across the moving average, we know that volatility is returning to the market. That's the weekly chart. On the daily, it looks a little bit different, but nevertheless it's operating in this channel, which we can easily identify by running a few lines across it. And when it breaks above this, well, we know that volatility is returning to the market, and we're likely to see lower prices. The Australian dollar has shown that it's broken through this trend line, rising trend line, in what it can be perceived as an ending diagonal. The relative strength has broken through, dropped back up and coming to retest, as has the price action itself. It's now come up and retested this trend line, which is very, very normal, and I still think that 9600 or lower prices is on the cards. And if we wanted to measure where those lower prices are, and we've done this before, but we just simply put the Fibonacci retracement on and say, well, there they are. There's 93.40, round number 96 is obviously 60 pips higher. Nevertheless, 94 here and 92.50 down here. So they're targets in the event that we get some wind behind the back, and indeed the US dollar continues to strengthen. These prices are likely to come down. So a retest going on at the moment, and further weakness is likely. In the event that we get a bullish move up and the US dollar tanks, and indeed the Dow rises, then we'll see a blast through parity, and we're working up to that 1016, or indeed 10124, I think was the other target. This is a comparison of the major Australian industry sectors against the ASX 200. The black line is the ASX 200, and clearly what we're looking for here is what is outperforming the ASX 200 and what is underperforming, and that gives us an idea in terms of identifying stocks where we actually want to select our trades from. Now, materials is obviously the standout, and has been for some time. We can see that it's tracked up really nicely as the gold price has pushed up. Materials has benefited from the strong Aussie dollar as well. So that all makes sense, but we've come to what could be perceived as a major high. 6,000 is the target here, and we've seen that once it reached 6,000 it's pulled back immediately. Industrials the next, trailing considerably under, and the big one to watch is this financials, which in the past, as you can see back here, has really tracked industrials and the materials. They've all moved pretty much in sync. Here down we come through correctional activity and then push back up to find support at around that 5,000. This is a major level of 5,000 here, and yet that's on the ASX 200. What's occurring is the financials is really diverging from the materials and industrials, and energy is just tracking along below. But financials and the whole issue of credit around the world is the key concern here. Looking at the industry sectors themselves, this is energy, the bottom red one that we talked about, and you can see that it's tracked up more or less sideways for some time. There's uncertainty about the world oil price, even though its chart looks a bit more volatile than this. This is the weekly chart, but we're expecting a retest of this line, and then depending on what happens in world prices, a push lower. Now this is industrials, and it has really rallied up strongly from the end of the GFC, and has now pushed through this previous head and shoulders line, neckline, came back, tested it, and has come up in these overlapping waves. It's come down and really retested it this week, but I think that depending on what happens with the world indices, we'll either see support and a continuation up, or we'll see a blast through and a recommencement of a bear trend there. So look, the jury's out. There's nothing to do there in industrials. And as far as that's energy, again a different chart. This is materials, so you can see clearly the triple top activity that's occurred. This rising trend line, which is over the top of the price action, is not entirely relevant now, except to say that it did blast through it, came up, hit the triple top, then came back to retest it there, and that's a hammer, which is actually a bullish candle on the weekly. So we'd be expecting to see some renewed activity here if the indices are going to climb higher. If not, it could just rally, that gap will be closed, and then we'll continue on in the bear. So again, jury out on materials until we get direction from the price market. Looking at financials, you can see the weakness that's occurring here in contrast to the materials, which had that triple top activity up here, and there's your previous high in October 09 and April 10, and the financials just has not gone with it. So we have to take heed of this. We really have to say, all right, well, there is an issue going on here, question mark over the issue, but it's largely to do with world credit and sovereign debt, and what's going to unfold, potentially unfold, in the event that there's any stress on that sovereign debt. So that's financials, and one to really watch as a bellwether of the broader indices. So that's the end of the presentation today. We've looked at those geeks. I'll have a look at some financial stocks early next week, or perhaps over the weekend. I'll post that out for Monday. But in the meantime, you can go to marketforecaster.com.au and check out all of the action there in greater detail.